Hello, how are you doing today? Hope you're having a very good session or having very good couple of sessions in the conference. I'm happy to be here to share a few of my thoughts on the role of AI in insurance. I run Curacel, and in Curacel, our mission really is to be able to drive insurance penetration in the continent of Africa and across emerging markets using technology, of which AI is a key part of the technology we're leveraging. Okay, so this is driving penetration across the market or across the continent is really what we're about. It's what we wake up to do every single day of our lives. And AI is a core part of technologies we leverage to be able to do this amongst all others as well. So for the next few minutes, I'm going to share a few thoughts on the top. I'm going to share the few thoughts on the topic. I'd like to keep it, around this outline, which is I'd like to talk about the role of what currently happens at the moment in the continent, where insurance is currently in Africa, and then I'd like to give a few scenarios, a few use cases, and how AI can actually help, and then finally I'd share a few examples of how we are leveraging AI to drive up penetration in the continent at Curacel. I hope you enjoy this. Please feel free to reach out to me, pose this topic if you have any questions, if you have any comments to make, if you have any suggestions, or if you're also very passionate about this mission, please reach out to me. We'd love to try to find a way to work with you as well. So what is the current state of affairs in the continent right now when it comes to insurance? According to a McKinsey report, insurance penetration in Africa is currently half, of what it is in globally, right? Compared to global rates, that penetration is half. Okay. The sort of like the premiums per capita, right, is 11-fold lower than global, compared to the global globally, right? So apart from the economic, the economic, the costs, what this, can sort of like cost in the economy. It also has like massive risks around like individuals and businesses as a lack of that protection gap. Okay, so businesses don't have any protection, have very little protection. Individuals don't have any protection. So there's the ripple effects go beyond just economics. It goes into social, and then it affects everywhere else. So currently there's a bit of it's a bit of an issue, the lack of protection gap on the continent, and I think this is a big problem that needs to be solved as soon as possible as well. Okay, there are various reasons why this is the case. Okay, I'm gonna share a few thoughts on why this is the case and why there's currently low penetration on the continent. Okay, first of all, the first one I would like to share, there are three things. The first one is culture, right? So traditionally, Africans have been known to be slightly, compared to the rest of the world at this point in our development, we're slightly more communal based, right? People, if you have any problems, people would go to their friends and their family. So from a cultural perspective, having hedging your risks or insuring your risks with an individual, with an organization, or with an institution, is not, I would say, not part of the culture. It's not inbuilt. It doesn't feel organic, right? So people trust their communities, they trust their mosques, their churches, their friends and their family. So when there's a healthcare crisis, you reach out to your family first, you reach out to your friends, you reach out to your religious organization, and that's where you get your sort of like your value from. So this is one of the key reasons why there's low penetration, right? So people, because people have to go out of their way, but this obviously this needs to change. Obviously, another key reason, which is the macroeconomic landscape of some of the countries in Africa, right? So currently, there's, if you sort of like look at, and obviously I'm Nigerian and I live in Nigeria, and when you see in the past couple of months, there's been massive amounts of inflation. So again, this goes back into the lives of people, right? So people are not really thinking about buying insurance because people are busy, also just trying to survive as well. So there's a bit of that also goes into the reason why there's low penetration, because historically speaking, insurance is a financial service that has been designed and mostly around people who have disposable income, mostly around the middle class as well. So if we need to start to think about how do we get insurance to the masses, we have to start to look at how can we tailor make the product for the economic realities of the people on the continent. Okay, and then finally, it has to do with inefficiencies in the value chain, right? So not just inefficiencies in a country, that's not the case here, but in the continent, but inefficiencies in the insurance value chain. Okay, so in more mature markets where there are underlying like distribution infrastructure agents, that exists and all that, right? It's easier to to kind of like move things around where there are the right policies, where there are also like the right processes and the right technology tools in place. Then it's easier to talk about operating a proper insurance company, because to be able to run an insurance company, or to be able to run an outfit that provides insurance or underwrites insurance, your costs have to be very efficient. So when you have to spend when you're not underwriting properly, so this leads me into the next sort of like, I'm going to kind of like, so when you look at all these things from like culture to macroeconomics to the efficiencies in the insurance value chain, the place that AI can help us fix has to do around the inefficiencies. Okay, so I'm going to talk about three key components. There are a lot more components that you can, but I'm going to focus on three key components that I believe AI can create a lot of value in. Okay, so when we talk about artificial intelligence, right, we're talking about how can we implement cognitive systems that can do the work that a human would ideally have done, right? So when we try to look at the places in the insurance value chain, what are places that AI can probably perform better because it has better memory, it has the ability to do better analytics. It's a human being. It doesn't have to remember. It doesn't struggle to remember 10,000 data points. So there's a couple of places that AI can play a big role. So I'm gonna illustrate three of them. One key piece is around pricing and underwriting. Okay. So when I talk about pricing and underwriting, this is how do you create a product? How do you come up with a price of a product? How do you underwrite the risk? How do you look at when you look at an individual, an organization, and say this person fits into this risk profile or into this risk bucket, and I can offer them this policy or this at this rate, right? So this is a key place that we can start to leverage AI to do better underwriting, to do better pricing. Okay. So right now, when when you kind of look at how the insurance companies are working, a large percentage of the insurance companies are still doing underwriting and pricing manually, right? They take a look at data. So you're coming, how old are you? How old are you? What is your career? They can look at a couple of risk factors. Obviously, the underwriting process works slightly different for different lines of insurance. But it's still pretty much manual. It's very subjective. It's very relative. The underwriter has to make the decision himself based on certain risk factors. But this can, there's a wealth of data about the individual online, right? And if all this data can be aggregated into one central source, the algorithms are able to make better decisions and more scalable decision making, right? Because one of the biggest challenges is a different underwriter will probably score risk differently from another person because they're all different individuals, right? So the current modes of underwriting and pricing isn't that scalable. As well as it also takes a bit of time. You need to collect all this information. So the way insurance is modeled, most insurance companies still sell premiums annually, right? Best case scenario, you can see quarterly. Some people are starting to try monthly. And the reason for this is that they have to underwrite the risk, right? And because as you leave, risk changes, right? So they can't underwrite. There's no real time because they don't have the data to underwrite your risk in real time. You have to pay, upfront once a year, right? But if there were means for them to constantly collect data and then underwrite, your lifestyle underwrite, your activities, and then recalculate the risk in real time, then you can see people who pay lower premiums, depending on, what month it is or what activity they're engaging in, and so on and so forth. Okay. So we're starting to see some of these applications in a few places. Companies like Metro in the US is starting to provide or underwrite products based off, as you're driving, so they provide auto insurance, and as you're driving, they collect a few details based on the sensors in your car, and you pay as you go, basically. So if a situation changes, it changes also sort of like the amount that you also pay. So this is a key part that AI can play a big role. Another key place that AI can play a massive role is in the place of distribution, right? So currently, when you look at insurance, a key part of the cost is also made of cost of acquiring the customer, and right now a lot of it is, so the reason there isn't, one of the key reasons why there isn't a ton of penetration as well is a lot of the insurance companies focus on group policies, like selling to corporates, selling to because it's not easy. The cost of acquiring retail customers or to going direct to consumers one by one is pretty expensive. So this is one of the reasons why what is the right way to target women in the market? What is the right way to target? So there's not like easy way to target, right? Some of them are leveraging of trying ads, social media ads at this point, but there's also not like a very it's not that easy to be able to do that as well. But this is where AI can also play a huge part. Okay. And again, it's a subset of something else. So one key part of the distribution around insurance that is pretty interesting right now is around embedding insurance into other ecosystems. And you can't do this without having a strong AI proposition, because to be able to offer insurance to, let's say you're integrated with a vendor, or let's say like a bank, and a bank has 20 million users, you can't offer all those 20 million users the same plan or the same policy. You have to be able to look at, make a few decisions based on the data you have to be able to say, okay, this plan should be given to this person because he's a doctor. So I should probably, and he has this type of car, so I should offer him insurance for his car. But this is a 70-year-old man, doing pension. I should probably offer him like a fund, sort of like insurance for his pension and stuff like that. So being able to alternate between the the profile of the individual to be able to offer them different policies. And then finally, another part is leveraging on AI as well to be able to do claims, right? So automate claims processing, right? Again, this is a part where, we've done a lot of work in Curacel. And basically, what it is when data is coming in. So first notice of loss. So when a consumer or when a policy holder is about to make a claim, is you don't just, people don't have to like go through the process of like, verifying each claim, doing all the fraud detection and all the fraud checks. You can automate all that using AI, right? And this is a solid, this place has a solid, value proposition around AI as well, because it helps you, speed up the process from what a human being would typically do. So yes, so this is also, so in the claims part is where we've been playing and where we've done a lot of work. Obviously, we're starting to gradually get into all the other sides of insurance as well. But claims, so far, we've been able to, in about 2 years of being in operation, process about 750,000 claims and saved more than $400,000 for some of our clients. Okay, how have we been able to do this, right? So we're currently operating in 2 lines of insurance, the health insurance side of things, and then on the auto insurance side of things as well. And we've been able to create like models, right, that are able to, ingest the claim in as a claim is coming in from whoever the claim is coming in, and then be able to make decisions on the claim and say, this should be paid, this shouldn't be paid. And we can do this. So right now, with this, we're able to reduce the time or speed up the time it takes to process a claim by over 70%, right? So if it used to take someone an hour to be able to go through a pile of claims with our product, you're able to go through them in 70% less time, right? With this product is currently being used by about 11 insurance companies across three markets, right? So big value proposition, saves a lot of money. And then the other product is also very similar, but for the auto insurance vertical, right? Where, when a claim comes in, when something happens to your car as an individual, you just need to take a picture and submit the claim. So before, what would typically happen is insurance companies will have to spend time, get back to you, send somebody to evaluate your car. But we've made it easy to do that first notice of loss without being physically present. You don't have to drive your car to the insurance company. You take a picture. We're able to analyze what is damaged in your car, and we also, provide how much some of this should cost. So this is like the power of AI in a few of those places. So in conclusion, right? So AI has a big role to be able to play in being able to, from figuring out what's the right kind of product that can be built, who do you sell it to, how do you get to them, and then ensuring that as an insurance company that you have, as an insurance company, that insurance companies have, that efficiency that is required to keep their margins, profitable. All right, so those are my my thoughts on how AI can help. Please, if you have any questions, if you have any comments, open to reaching out to me. My email is henry@curacel.ai. Thank you very much. Have a fantastic rest of your day. Cheers.